Hey guys, what's going on? It's Leo. Not financial advice, not a financial advisor. So today we're taking a look at Bitcoin against the US dollar on the weekly chart. We're going to take a look at the fib time projections to try and get more of a range as to where the bull market is likely to end. We're going to talk about the cycles relative to the halvings, and we're also going to talk about where could the possible bear market floor be for this coming bear market whenever it comes around. So let's go ahead and start with, if you notice here, I have these dotted vertical lines on the chart. Those are denoting the halving dates. This one is noting the one possibility for the proposed bull market top, and that is based on measuring out from the measuring out from the halving to prior bull market tops. And I believe, if I remember correctly, each measurement is 1.2 times the length of the prior. So the last one was 58 days. This one's 70 days. And so this one would be under the assumption that it would be 1.2 times the length from the halving to the 2017 market top. So that gives us 1 point of confluence as to where this market could be topping out at. Assuming that this trend continues, what we've been seeing, this repeating pattern. Okay. So now let's take a look at fib time. So what this little thing here is that this chart is showing the entire history of Bitcoin for what we have, but Bitcoin was created prior to that. So what I've done is I've calculated out, when it was created. So I'm starting from Bitcoin's origin. I'm running to the first bull market peak back in 2011. Okay, so we had a real quick correction there before it continued. But you'll notice that, the top was about 2 times the length of the initial run up here, if that makes sense. So the first bull run, we had our correction, right? So measuring the length of the first bull run times 2 in time gives us pretty close to where that market topped out at, just before the 2x in length. So let's go ahead and do the next one. So we would start from here to the top. Is that right, or is it? Yeah, that's right. Okay. So you'll notice that for the next bear market, the second bear market of 2015 and 2016, we bottomed out just in between the 50 and the 618 of the fib time projection. The top for 2017 was very close to the 2 times the length of the initial bull run. Okay, so let's go ahead and take a look at the next one. Right to there. Okay. You'll notice that we bottomed out right around the 50% mark, meaning that we're measuring how long the bull market took in time. So 50% of that time. If it took a year, then, this is 6 months out, basically. So we bottomed out here and we started moving. Interesting. So what does that do? That gives us a time zone as to where it's likely to top out at. So I'm inclined to think that it's more likely we're going to top out closer to the end of January, just because measuring out from the halving seems to be more accurate with each cycle. So I think that's very likely. But, I want to put this up here because it's always good to have a range, to what to expect. Whenever you look at markets, it's not, people think that you can be exact to the cent every single time. That's not exactly how it works. It's more so that you're casting a net and you're trying to, catch 100 fish out there. You're casting a wide net rather than trying to catch a fish with your bare hand type of thing. So the 2 times the length would put us in end of June of 2022. Okay, so we're looking end of January to end of June, right? So that gives us, a 6-month window there that this thing could be topping out. Interesting. So let's go ahead and take a look at where could the possible bottom be for the next bear market? So I'm going to zoom in here because what I'm going, well, actually, first, what I want to talk about, so this white line here is going to be your 200 EMA. What you'll notice is for the entire length of Bitcoin's history on the weekly chart, we have sustained above the 200 EMA. And that's important because that gives us a reference point as to what will likely be support in the coming bear market. So if we do go below the 200, I suspect it'll be just very briefly, and then we'll be right back above. As you notice here, it was a wick. So we wicked down. Prices was rejected back up above the 200 EMA. Same thing happened here. We briefly traded below it before continuing higher. We wicked below it before continuing higher. So I expect something like that will occur on the next bear market. So I'm going to go ahead and zoom in now so I can see the price action better. Okay, so let me see here. Where's the drawing tool? I always lose these tools. I've used this charting software for years and years, and I can never remember where these little tools are. There it is, brush. There we go. All right, so I would expect that if we're going to top out around here, what you'll notice from the prior bull run, EMA is running up, 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 but once we start to correct, the EMA begins flattening out. So if we're going to continue the same angle, right, the same slope that we've been increasing to the top, and then we start to, still kind of gradually move, but more of a sideways type pattern, I suspect the 200 EMA will play out something like that. So that would give us a market support of around 53,000 ish. We'll call it 50,000. If I think we're going to top out around 50, a 50% retracement would be to 50,000. So I think that's very likely. Okay, so that's interesting. Let's go ahead and take a look at, did not mean to do that. Let's go ahead and take a look at a fib, right? So you can pull it up there. Let's say we top out around 100,000, make it simple. That's close enough. Okay, interesting. So, we top out up there. There we go. So we top out around 100,000. Okay, we start pulling back, right? Coming down to the 50. We have the 200 EMA. So I think if we top out, 50,000, maybe we wick down to the 618 briefly to 40,000. That's possible. That would give us, that would stick with the trend very nicely from what we've been doing. Let's see, what else can we take a look at here? Okay, so we can take another dimension. We can take a look at where let's look at the fib time, right? So let's look at fib time again. We're going to pull from here to the market top. Oh, that's right. This would be your low because, hang on. Bear with me, guys. Okay, so this would be it's not the low of the market, but the way that I had it counted from an Elliott wave perspective, this was the bottom. So we'll come up to here. Oh, well, that's not the top. Gosh, I'm just not thinking right. Okay, so I'm just going to split the difference between the two. So let's just assume that it ends, we top out somewhere in April. Okay, so that would imply the bear market would likely complete sometime around April of 2023. So it would be a relatively short bear market based on what we've done and what we're assuming will happen. Let's see here. And so then we can take a look at the next bull market, which would be around 2026. That's where we would top out at based on, previous price action, this cycle, looking at fib time projections, all of these confluent pieces coming together. This is what it's showing us. We can look at the prior bear markets where they ended relative to the halvings. So here's your halving. We ended in the back third, let's say. So you have, you split between the halvings, right? Split it into thirds, right? This is right around the 2/3 of that cycle. This one was actually very close to the halving. If we ended it here, the low is there in the middle. So it's actually a little bit to the right of the middle, but you get the idea of what I'm trying to do here. So, it's giving you an idea of what to expect. I think that the days of 90-80% corrections are actually over for Bitcoin. I think it's becoming too mature of an asset, because typically where you see these massive amounts of volatility in an asset, it's because they are, one, is illiquid, so there's not a lot of liquidity on the books. Two, it's that there's not a lot, it doesn't have a large market cap. So if you think about market cap and money within an asset, or value within an asset, think of it kind of like the ocean. If it doesn't have it doesn't have a lot of volume, and it doesn't have a lot of a very big market cap, and you have a cup of water, they're kind of analogous to one another in that you can kind of throw a cup of water around and do whatever you want with it. So you see these big swings in price. If you come back here to the beginning, Bitcoin hit a high of $33, and it went all the way down to $2. You know, it's much harder to do that with an asset that's mature, like, say, gold, right? You don't see gold going from $2,000 dropping to $100. Why? Because it has such a large market cap. It would take so much time for all of that money to flow out of the market. So, that's a big piece of it. Let's see here. Yep. So I think that pretty much covers this video. Hopefully that didn't get too confusing. I know I have a lot of lines going up and down and horizontally on this chart, but I wanted to give a general idea of what we could be expecting based on support and resistance and the cycle theory that we're working with. All right. Well, I'll talk to y'all later. If you have any questions, drop them below. Like, share, subscribe, and peace.